Good afternoon, ladies and gentlemen. My name is Robert LaHunt, Executive Director of the Board of the Inter-American Development Bank Group, with responsibility for the Caribbean region. My disclaimer is that I'm not speaking on behalf of the Inter-American Development Bank, but in my personal capacity, having worked in the commercial banking sector for over 30 years. I'd like to introduce Mr. Ian Durant, who is the Director of Economic Development at the CDB. Mr. Durant.
First, let me thank the organizers of this pivotal forum for extending an invitation to the Caribbean Development Bank to participate. As the region's development bank, this session on unlocking Africa-Caribbean trade and investment through financing is very relevant to our mission. Access to adequate, affordable finance is, in fact, the theme for our next annual meeting of the Board of Governors. We recognize that the ambitious development vision we have for our region requires a substantial amount of finance, an estimated $100 billion over the next 3 years. And so we are redoubling our efforts to mobilize a greater quantum of resources for our region. We believe that adequate and affordable finance is the key to unlocking the potential across our region to achieve greater economic and social advancement. We therefore welcome this opportunity to discuss how we can collaborate to develop financing solutions to facilitate trade and investment that would unlock the trading opportunities between the Caribbean and Africa, which could ultimately improve lives and livelihoods across both our regions. Now, economic theory has always emphasized the importance of trade for the growth and development of an economy. Indeed, as we draw closer to the end of the 2030 agenda, the importance of this relationship holds even more relevance today. Trade plays a central role in the achievement of many of the Sustainable Development Goals, especially as it relates to reducing poverty, enhancing food security, and bolstering economic growth. Therefore, it should go without saying that the formulation of a strong relationship between Africa and the Caribbean for trade and investment can be mutually beneficial for driving growth and development in both regions. For Africa, the Caribbean represents a market of around 19 million people, diverse investment opportunities, and close geographic proximity to North, Central, and South America. For the Caribbean, the African continent provides a potentially large market and an opportunity to diversify regional exports. As it relates to the current state of trade between Africa and the Caribbean, according to the UNCTAD Stat Trade Database, CARICOM merchandise trade to Africa totaled around $422 million in 2021, accounting for just over 2% of total CARICOM exports. In the same year, Africa's merchandise exports to CARICOM totaled around $237 million, which accounted for less than 1% of their total exports. There's therefore much scope for us to deepen trade and investment relations between Africa and the Caribbean, and much to be gained as potential development dividends. However, we must bear in mind that while governments formulate trade agreements, businesses are the ones that ultimately participate in trade. Therefore, fundamental to the creation of trade is the facilitation of trade. Ultimately, in this specific context, facilitating trade will involve creating an environment that allows exporters to get their goods or services across the Atlantic at a competitive price in adequate amounts and in a timely manner. This ability will require an appropriate ecosystem within which exporters can operate, inclusive of good airports and seaports, storage and packing facilities, road networks, and broadband capacity. This ecosystem should also include an appropriate regulatory and legislative framework that supports trade, including those related to customs and border procedures. These efforts require finance that is adequate and affordable. It is crucial for us as financial institutions, both multilateral and private, to explore how we can be more innovative in meeting these financing needs. A range of financing instruments such as SDG-themed bonds, private equity, contingent debt, and derivative-based instruments can be explored to build out infrastructure and support reforms. Additionally, while the investment needs are large, given the vulnerabilities of the region to natural hazard events, additional expenditure is needed to ensure that infrastructure is resilient in the face of these events. In this regard, CDB is developing a framework that would base the availability of financial resources on an adjusted measure of gross national income that recognizes both vulnerability and resilience. At a more micro level, a 2015 CDB study estimated that in the Caribbean region, MSMEs constitute between 70% and 85% of the number of enterprises, contribute between 60% and 70% of GDP, and account for around 50% of employment. However, the study indicated that one of the several challenges that MSMEs face is inadequate access to financial resources. Consequently, if we are to take full advantage of the potential of a strengthened Africa-Caribbean trade relationship, adequate financing to MSMEs will be critical. In this regard, CDB is currently engaged in developing flexible financing solutions that cater to the needs of the private sector, while addressing the challenges that they continually face, primarily in terms of access to working capital, finance, and collateral. Such financing includes supply chain finance, sometimes referred to as reverse factoring, and partial credit guarantees. Through deeper collaboration efforts such as this session today, financial instruments can be tailored to the needs of our firms. Already, CDB has begun to partner with the African Development Bank under a MOU signed earlier this year for the development of innovative financing instruments, among other initiatives. As financial institutions, we can explore avenues for financing of private sector trade ventures. We can also support knowledge sharing opportunities between businesses in Africa and the Caribbean through our market research and data analysis. We can also create knowledge products to assess market opportunities and support business decisions. There's much for both our regions to achieve from strong partnerships. Financing that is adequate, affordable, and timely is necessary to advance our vision for closer Afro-Caribbean relations. We at the Caribbean Development Bank therefore stand ready to partner with other financial institutions across the regions to mobilize the necessary financial resources to further develop these vital linkages. Thank you.
So to help discuss then some of the issues surrounding this, I take the opportunity now to bring on board my distinguished group panel. I'd like to invite, firstly, Mr. Cleviston Haynes, who of course is the Governor of the Central Bank of Barbados. Ms. Kanayo Awani, Executive Vice President, Intra-African Trade, Afro-Exim Bank. Mr. Simeon T.M. Tori, Chairman of the Vista Bank Group and founder and CEO of Simba. Mr. Andrew Taki Apia, founder and Managing Director of ZP. Mr. Gabriel Edgale, Managing Partner of Oakwood Green African Limited. And Mr. Anthony Clark, Managing Director and CEO of Republic Bank Barbados and President of the Bankers Association of Barbados. So let's dive straight into this topic. It has been, it's one that, you know, at the end of the day, there was a song in Trinidadian by Calypsonian, and he said, you know, you can't love without money. You can't make love on hungry belly. All right, so we know that money is important, and ensuring that we have a free flow of it is critical to facilitate any type of trade, because we all want to get paid. So let me ask Mr. Haynes, moving straight to you, sir. How the global, we talked about, we know we're now operating in a global financial village, all right? And therefore, whatever happens with us around the world. We are part of this big village. How the global regulatory landscape has impacted access to financing in Africa and the Caribbean.
During Ian's presentation, one of the things that he noted was the fact that access to finance is one of the difficulties which SMEs face. And that is true not only in the Caribbean market, in the African market, but I think globally, SMEs obviously have more difficulty in being able to access finance. And we operate, as you correctly say, in a changing global landscape. But I think at the end of the day, I'm not convinced that it is the global landscape that is actually impacting access to finance. In terms of the regulatory landscape, a lot of the changes that have occurred from a regulatory perspective relate to capital, how banks are supposed to set aside capital to manage the risks that they face. And the other side of it, which is an access problem, not so much of credit, but access to banking services generally, has to do with anti-money laundering procedures, which are also changing very rapidly in that global landscape. If we take an initial stab at capital, what we would see is that within the last 2 decades, there have been tremendous changes in the measurement of capital, Basel II and Basel III. And certainly speaking from a Caribbean perspective, what has happened is that most of our regulators within the region have adopted Basel II. But in adopting Basel II, they've adopted the standardized method rather than the models-based method, the IRB method that is done in more advanced economies. And what is interesting about that is that within the standardized approach to regulation, the risk weight for loans to SMEs has actually fallen to 75%, whereas for larger corporates, it's actually 100%. So that ought by itself to create an incentive for lending institutions to want to provide more credit to SMEs. But the reality is that that has not happened. And so it's very tempting to say, well, it's the change in the global landscape. But I think we also have to look at the structural factors around the SMEs, where limited equity, lack of collateral, concerns by the banking community about credit risks, the reluctance or the limited appetite that banking entities have to extend new credit to SMEs. Our staff, in doing some research, found one bank indicated that generally they won't want to lend to an SME until it has at least 2 years of experience of producing the good or service that they're producing. So that, to my mind, it's not so much the regulatory landscape. Yes, the regulators have become, have placed more onerous regulations on the banks. We've asked them to do more things. We make sure you have financial statements, et cetera. That is something to which obviously a lot of the SMEs are unable to comply with, and therefore, if you don't want to run afoul of your regulator, perhaps you will decide that you don't want to provide credit at that point. But I think generally, the bigger problem really are the structural problems which SMEs face rather than the regulatory landscape itself. As Ian points out, a large segment of our community is really micro enterprises and small business and what we call small businesses. And when we talk of small businesses, it's really not the same thing that you might talk about in Africa, because a lot of our businesses have less than 5 employees. So we have essentially lots of micro businesses. I think a study that was done a few years ago suggested that almost 50% of the businesses that we have are actually micro businesses, and almost another 40-45% are what you would call small, and by small they were talking about 25 employees. If you look at the European definitions, you know, we're all micro businesses basically, rather than being what you would say are SMEs, traditional SMEs. So it's that structural factor that I think we have to look at. How can we address that structural factor while trying to encourage our lending institutions, nonetheless, to be more open to being able to provide credit, not so much because of the regulatory, but how can we foster growth in our economy? And it's going to have to depend on our ability to be able to finance these small businesses that are creative, that are willing to be innovative, And I think our financial institutions have to therefore increase their appetite to take a little bit more risk than perhaps they have done over time. And I'm speaking as a regulator, but I think they need to take a little bit more risk that they've taken over time in order to ensure that there's greater access, because governments will try to provide other funding activities through, we have fund access and enterprise growth fund, which are trying to lend to these types of businesses. But these businesses don't have the capacity to do the type of lending which is really required for these small businesses.
All right, Mr. Haynes. I know some commercial bankers here might want to have a little bit of input onto that. But you know, as we started this small business line, and I heard it here, you have started it there. Let me go straight, jump across to Mr. Edgale. You know, and again, we talked then about small business, and he's mentioning that, you know, we all recognize that for this whole trade and finance, a lot of this export to work and is going to be fueled by a lot of what we call some of our small business companies. And if you are saying what you are saying, what are then some of the solutions that you think to be pursued to address from your perspective? So Mr. Haynes has said that that's really where the problem is, not the regulators. You give me some of the answers that you think. What are some of the solutions that you think we need to be pursued to facilitate that SME financing gap?
I'll draw from Her Excellency's words. The Prime Minister, such a powerful speech, very motivational. She says that this gathering was written in the stars, and that we're meant to be here. Definitely we're meant to be here. I was definitely meant to be here. This for me is a dream. That one day I will sit here and be part of history being made. Everyone in this room now is part of history being made. You know, it reminds me of one of the greatest exports out of the Caribbean, Robert Nesta Marley said, "How good and how wonderful it would be before God and man to see the unification of all Africans. Africans unite." Look, trade is a uniting factor. So I'll thank Afrexim Bank for this, absolutely. I'll thank Afrexim Bank, the government of Barbados, that we're using trade to actually unite Africa. It's amazing. Now let's go to the question of SMEs. SMEs definitely are the bedrock of any society. They're 80% of any society, and we can never leave them out. And the governor said something, that the reason SMEs have a problem of getting finance is not due to regulatory reasons, but the banks don't really lend to them. Now, how would you blame these banks? I have some solutions, by the way. Because you see, these SMEs are not structured. It speaks about structural problem, governance problems, and things like that, right? And that's because perhaps, so what's happening here is the commercial banks find it very difficult to bring these SMEs up to the stage where they consider them bankable. Because obviously the models that are used to assess risk are the models that we have always just downloaded from cultures that are completely different from ours. We should begin to look at homegrown solutions, seriously. Yes, we do know that there are structural issues, yes? We also look at the fact that some of these SMEs are over-reliant, over-dependent on the traditional lending, equity loans from banks. But there are other products. And when I got to know Afrexim, I knew that Afrexim Bank was solving a lot of these problems already. I mean, there's factoring, supply chain finance. There are things like that, okay? The structural issues would always be there. They are there. But there's one very fundamental thing that Africans used to do and still do in a lot of communities, which is community-based lending. It's this thing, I think it draws from the philosophy, Ubuntu.
We call it
I am.
susu.
Because you are.
Susu.
You call it susu.
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 Gaya.
Exactly. Exactly. And you have these susu things. So this cluster-based lending would work for SMEs. Okay? But obviously infrastructure has to be there. So you need, people, when I look at how you try to rate, you're using the rating models that a Fitch would use to rate the man who is, doing business. All his business is cash. You don't have those infrastructure. You are not starting. That's a non-starter. Okay? But there are peculiarities that these SMEs have. If you see those that are doing those cluster-based lending, those community-based lending, where all of these people are in clusters and they guarantee one another, those loans don't go bad.
Okay.
Okay, they don't go bad. So that's one of the things. But the truth about it is that how do we now begin to get the SMEs to the kind of level where they become bankable? Put some structure. Now, we in the private sector, we cannot leave this. And this is one of the reasons why my organization was established. Okay? We run an organization called Oakwood Green Africa. But Oakwood Green Africa has an arm called AfriCelerate. It's to accelerate small companies. Now, that effort that the commercial bank does not want to do on getting the SMEs to a point where he can lend to them, we do that. So we take them from through 5 stages. Training, tools, structure, governance structures, and things like that. So today, we have a banking group. Oakwood Green has a banking group in West Africa currently. And we have about 2,000 women now that we're taking through that in the Gambia. We're doing that also, we do that in Sierra Leone, we do that in Liberia and things. And these are things that really should be done, for SMEs in Barbados. We take them through 5 stages of growth, okay? And those 5 stages of growth take them to a point where they can now become export-oriented companies, so you now begin to develop them for exports. And this is one of the things that is critical for development in Africa and these SMEs. We have those exports. They don't even have access to markets, okay? They have these products. When we attended, and God bless Afrexim Bank, again, I can't stop saying this, intra-Africa trade. And interestingly, we have the driver of the Intra-Africa Trade Initiative, Madam Kanayo Awani here. When you go there, you will see some of these products that these people produce. They just need basic finance. They need access to markets. I'm glad now we're opening up the entire Caribbean market for West African exporters and vice versa. Amazing. So because of that, we also started doing some trade forums, which we call trade roadshows, in each of these countries. So we did one in the Gambia, we did one in Sierra Leone, we did one in Ghana. Amazing. And you found these people, okay? The point was that the kind of lending that can be done directly by an Afrexim bank is huge. So they can't touch those little ones. And then the commercial banks won't do that. So if you can come up with a structure, which is what I just said, then you can get the development organizations that do on-lending to these institutions under these structures, and then you can actually get this to the people. And so we're doing that now. I think we'll be doing a test run. Hopefully we'll be getting that on-lending line from Afrexim Bank, and we can begin to lend to the SMEs. Thank you so much, and I have so much to say about this.
Okay, well, at least you have given us some food for thought with regards to some new types of ways of looking at it from a different perspective.
Yes.
And SMEs looking at seeing how they could deal with it themselves. You've spoken a lot about, and you've used the word, you have heard Afrexim Bank, and you have said it over and over. I think it's about time, therefore, we hear from our representative, Ms. Awani here, who is from the Afrexim Bank. And let me ask, what role do national and international development financial institutions play? And how can African and the Caribbean development financial institutions collaborate to unlock trade and investment opportunities in the region?
In my view, Afrexim Bank exemplifies a model DFI in terms of our interventions, in terms of resolving market failures, resolving crises, Let me give you an instance. In a few minutes, probably today, Mr. Governor will be signing what we call the Caribbean Africa Trade and Investment Promotion Program. The idea of that program today is to support trade and investments between Africa and the Caribbean. It has financing elements to it, and it has non-financing elements to it. So that you people here know that we are ready to do business. This is not just another gathering. It is a gathering where we want to support whatever trade deals or investment deals that are concluded in this forum can be financed. Professor Rama this morning talked about a $750 million package for the Caribbean upon, as we start our intervention following the partnership agreements that were signed. He also mentioned about a $250 million facility, and that $250 million is a Caribbean Africa Trade and Investment Promotion Program. That program will support financing deals. For instance, earlier on, I did hear one of my colleagues here talking about industrial parks, for instance, that sort of the things, trade enabling infrastructure, ports, sea links, air links. The discussions around air links and logistics have been so prominent in this conversation today. We will support the creative industry as well. It's interesting to hear Gabby talk about the cluster financing under our creative and cultural industry program. We actually have cooperatives financing. Because of the unstructured nature of some of the creatives, especially in the fashion sector, we also have financing those. We will finance, the other thing I want to talk about is we also lend to financial institutions, commercial banks for on-lending to their clients as well. To have an investment guarantee facility and investment finance facility. So my friends here, Gabi and Samuel Victoria, some of those who are looking to open up shop in the Caribbean. They are bankers. They have also benefited from Afrexim Bank finance, investment finance. So we support them to go and invest in other African countries, but of course they're looking at the Caribbean now. We're also looking at investment guarantees, and Afrexim Bank has a menu of guarantees. They could be country risk, investment guarantees that help to protect investments from government actions that mainly inhibit normal operations or repatriation of profits and what have you. We also have the non-financing instruments. ITC's report suggests that 70% that the absence of a free trade area between the Caribbean and Africa means that tariffs can get as high as 28% in some sectors. So there are things to be done in that area. There are also non-tariff barriers. In the context of the AFCFTA, where we operate the African Continental Free Trade Area, where we're also trying to support its implementation, we have things like we're supporting the setting up of Africa Quality Assurance Centers. These are to deal with issues of quality infrastructure, standards, testing, inspection, and certifications, labs, to ensure that African, and probably in this case, Caribbean goods, have accepted.
Is it easy to make put these products in place?
I think the best way to say it is that although we're a DFI, we're also commercially oriented. We work like private sector. In 5 years of leading the Traffic and Trade Initiative, we have disbursed $20 billion on a rolling basis, in a revolving basis, only for intra-African trade. That's not what the bank does. This is just for my group, intra-African trade, $20 billion. Think about it. We have facilitated access to new markets. We enable, we work with what we call our intra-African trade champions to expose them to markets, so that they have opportunity of getting access to contracts, twinning, in other countries as we promote intra-African trade. So, I think they can talk about that. The issue about industrial parks is we're not just talking about it, we're developing industrial parks. If you've heard about the Gabon Special Economic Zone, We finance that to the Gabon Special Economic Zone. We're supporting development because we also have an impact equity fund. Development of industrial parks ourselves, not just providing project finance, we're also developing ourselves as promoters. So we have one in Abidjan, it's called PK24 that we're working. We're doing one in Benin, Republic of Benin, Togo, you know. And then the quality infrastructure products I was telling you about, which is the standards, the testing, inspection, and certification labs, we're building one ourselves as well. In Nigeria, in Ogun State in Nigeria. We're already doing one in Egypt, in Tanzania, and in Ethiopia. So the financing is there.
All right, but okay, so we're hearing, we spoke about the small business that is important. We have the products that is there to make this thing happen. The movement of funds, we have heard a lot is happening, we know the fintech industry is growing throughout the world, it's coming into the commercial banking, it's taking space, products, movement of, what are some of the innovative instruments available to ensure access to finance? Should factoring play a greater role in financing African Caribbean trade? Let me ask Andrew.
To go back to Prime Minister Motley's statement or speech today, we're here to unify our markets and build a single corridor. If that's the case, then why are we here? We're here so that we'll be able to make trade and make payments for it. But I think it hinges on three core things, and these core things are policy, and I'll explain all of that. It hinges on regulations, and it hinges on product and diversity. From a policy perspective, Gabby mentioned a lot about it, Madame has talked a lot about it. We actually need to make a deliberate attempt to bring the structural issues into policy and enshrine it. And then we need to have a tariff arrangement so that our markets have an equitable play in the game and are not sort of quote unquote disenfranchised by the bigger markets. We also need to make sure that in that policy arrangement, we also have quotas and the relevant things that will make trade safe for all of us. If that is in place, then we need to be able to facilitate the payment. So we need to also have a deliberate attempt on regulation. The time has come for both Africa and the Caribbean, I believe, to ask itself, the models we are running, are they homegrown? The banking models and licenses that we have, are they going to factor this growth that we're looking for? Remember, we're creating a 3 trillion market with a possible market of 1.5 billion, if you even extend it a little bit into the Latin markets. So if we're creating this new world, this new order that we are calling it Africa-Caribbean Union of whatever sort it will be, then maybe we need payment banks, we need correspondent banks, maybe we need specialized banks that are just trade banks. If we have that from a regulatory standpoint, then I think we can start talking about products. I think from a product perspective, Afrexim Bank has been a wonderful thing we've been able to achieve today. They should extend that. Can we have specialized credit lines that counterparty banks are all pulling from the same pool? So for example, one bank in maybe Accra has $5 million for this particular project. Another bank on this side has another 5 million, but it's from a common pool. So because it's from a common pool, then you can build products to disperse out of that pool because your risk is taken care of. That fear has disappeared. Then we can build obviously the regular compliance issues around it as we make this transaction safe. So if we do that, then we can start talking about some receivable finance, whether it's a form of factoring. But if you do it that way, then when Bank Y issues the instrument and says that I'm paying out of the kitty that Afrexim Bank has given me, the counterparty bank on the other says, yes, I recognize that, I know this fund, I've got the same fund, it's from the same parent. Then we can bring the technology. That's why I believe that the technology comes in to disrupt the process and says that when that export is about to go onto the ship, it's being tracked. There's an instrument issued of maybe $5 million. The other counterparty on the other side is very aware that the money, the product is coming. When it's on the ship, it's being tracked. When it gets to the port, it's being tracked. It's going through a quota scheme. It's going through some tariff trade benefit scheme. So all along, technology is also making it possible. Then at that point, the local bank can say, hey, you know what? The product has come. It's gone through inspection. We'll release it so payment is made on the other side. If that's the case, then it's not necessarily for me factoring, but making sure that we have these two core, and then the third, we'll take all the different beautiful banking instruments we have and repackage them again. Because that's really what technology does. It doesn't really change it, it just repackages it and makes sure it's smooth. So I think that today we've achieved a great thing. We built the bridge. I think the next thing is for us to sit down and move from here into working groups and start to talk about how are we going to make that policy shift. Then in there, the regulations will come in, the various banks, the various central banks will start to look at lesser models with the relevant compliance that will make it work. So that people don't feel disenfranchised, the markets that will come in, the players that will come in don't feel disenfranchised, they are not exposed to all these various de-risking issues, because all of a sudden we're controlling de-risking. It's two corridors that have decided to trade between themselves out of London, out of New York, out of Australia, out of Tokyo. It's just Africa and Caribbean. We have the banks, we have the parents, we have the DFIs, and we do it and we make it happen. So I think it starts from that perspective into factoring. And that's where I sit.
Well, okay, but you just heard again some words there. You talked about de-risking, and you talked about you almost carving out a space and dealing with it there. But I mean, that leads me into the other question about correspondent banking. Because at the end of the day, whether or not we create correspondent banks among ourselves, or whether we have special rules for correspondent banks among ourselves, that's a whole opening up a new issue. But let me ask Mr. T.M. Tory, Simeon, I mean, how restrictions of correspondent banking relationships and business services by major global banks in certain jurisdictions have impeded African Caribbean trade and investments? And to the extent, I mean, to comment on the suggestion of that carving out process that was just mentioned across there.
To that question, I think Afrexim, and I think everyone is talking about today about the product that Afrexim is putting out there. Can I mention something very, very important? The bank is now becoming the model DFI and addressing market failure. One of the critical market failure we're seeing is shifting regulation and big banks leaving the Caribbean, leaving Africa. As they leave, we buy them out. That's what we do. And that's how we built Vista Bank. We bought BNP Bank in Burkina Faso and Guinea. So, and because their model, as someone mentioned here, is not the same as our model. Yeah. The reason why they were there is different from the reason why we need to be there as a trade finance intermediary, working with Afrexim Bank to promote trade, to promote intra-Africa trade, financial inclusion, finance SMEs, and provide some of the innovative and critical instrument that's needed to lift Africa. So if we learn from what we have benefited from the instrument that Afrexim has put together to address those market failure as it relates to corresponding bank, there's a product that they put out called ACTIF, the African Finance Trade Facilitation Program. Essentially what it does, it pulls a number of banks, big banks in the market, JP Morgan, Citibank, SunChart, all the mom and pop big banks that's out there that will not directly deal with small banks like Vista Bank or Oakwood Bank, and we will accede to those corresponding banks. That's an immediate solution until we get to that working group that Andrew was talking about. Afrexim has a model that works very well today, from which we're benefiting and doing all of our trade financing for either SMEs or in any enterprises in Africa that is our client today. And it's working out very well. The model could be replicated here in the Caribbean, because I do see also a shift in the market with issue of corresponding banks that is preventing Caribbean banks to do trade and promote trade and could do LC confirmation. There's a model that can be replicated. The same model also could be used to promote Africa and Caribbean trade. And in that sense, I think that someone mentioned, we will be controlling our own vehicle, our own instrument to enable us to trade. Because if we were to solely rely on third parties, and that third party risk or shift or dealing with, could be well handled by institutions like Afrexim Bank, institutions like the CDB, the Caribbean Development Bank, together with Afrexim Bank, can come together and put an ACTIF, a facility similar to ACTIF, to promote Caribbean and Africa trade. Yes. The other thing is also that's causing all these issues with regulation and corresponding bank pulling out. It's KYCs, knowing your customer. Again, addressing market failure. Afrexim put out a platform called Mansa to address corresponding bank issue. You got to know who you're trading with, ultimately. So if you're a Caribbean businessman, entrepreneur doing business today, I will encourage you to go on the Mansa platform and sign up and register. And we have done that for all of our bank. We sign up the bank and we systematically sign up all the customers of our bank. And we encourage them as part of our onboarding process to be part of Mansa and keep updating their financial information so that the day they want to do a trade or an LC, and then we present it to our Flexim Bank to do the onboard confirmation, it goes smoothly. And that goes back to your question in terms of processing any application that's being provided. It's on us as a bank, and it's also on us as business people accessing those DFI to provide them with the information that they need to process swiftly whatever facility or whatever request that were made to them. Our experience has been that things have moved smoothly every time the bank has asked information that we need to provide. Obviously, they will give you a timeline. There are delays, like any other institution, but it's been pretty fast and pretty smooth. The key is to provide the information. But I think we do have the tools in our hand that we can learn from what they have done in terms of addressing some of the market failure. You know, Mansa is a clear tool. ACTIF is a tool today that we can potentially use. And if our Flexim work with CDB, putting together a bigger ACTIF package that will help promote Africa and Caribbean trade.
You know, the Mansa he mentioned, which is a KYC repository, is part of a bigger platform we call the Africa Trade Gateway. The Africa Trade Gateway is an umbrella platform that has various assets, digital assets. Another one is the Pan-African Payment and Settlement System. Yes. It's also a product that we are talking to the Governor. I'm sure my colleague Michael Balu may have been in your office today. That system allows for trade to be done in local currencies. So the buyer will pay in their local currency. We are piloting it in the West African region right now. So a buyer in Ghana will pay Ghanaian cedis, and if he's buying from Nigeria, for instance, the Nigerian will receive Nigerian naira. It's a way to deal with the foreign currency cost of trade. It's also a way to formalize a huge informal trade that exists today. I wanted to add that there are other platforms. One is the Trade Information Portal, because one of the things we've seen, and which is one of the reasons we have this platform, and exhibitors as well, is that we understand that there's lack of access to market information. And the lack of access to market information means that people in the Caribbean, for instance, do not know what Africans produce, where to source raw materials, and vice versa, or even what the rules of trade are. So the platforms, the Trade Information Portal and the Trade Regulations Portal deal with those providing information, just as our Trade and Investment Promotion Forums, the Intra-African Trade Fair, for instance, which allows people to connect, buyers and sellers to meet and exchange goods, and services, and at least to deal. So what will come out of a forum like this today is that you're bringing people together, potential buyers and sellers, that will eventually get connected and begin to deal and expand trade.
We also, last but not least on the panel, we also have, it was mentioned earlier that one of the banks one of the Caribbean banks, the largest Caribbean bank in the region, actually has done what we are talking about, gone across a little while now and actually made investments in the African country. So we have the managing director of Mr. Clark from Republic Bank. Now, Mr. Clark, that investment, give us a little indication of how that investment is progressing. And secondly, I know you yourself, as part of the institution in some of our discussions, between Republic Bank customers, which operates throughout the Caribbean, in Barbados and in other Eastern Caribbean countries, Trinidad and Tobago, you have taken some of your customers to Africa, Republic Bank customers, to see, listen, let's go and get this market. So you have been doing it, what we've been talking about doing, You have actually been doing it over the years, or over the past 2 to 3 years. Give us an idea of the experience that you have had. Give us an idea of that motivation to go to Africa in the first place, and what has been the experience, what has been the feedback that you have gotten from some of those you saw, the impediments to preventing the trade from happening?
As you said, Republic Bank is already playing that new game, so we have changed the game already for ourselves. So Republic Bank were looking for investments. We had, I wouldn't say we exhausted the region because we have done regional investments since then, but the opportunities were few. So we hired a consultant to view the landscape globally and see where would be a good fit for Republic Bank in Trinidad. And they came up with Africa, they came up with Ghana, and there was an opportunity there. So our laws were similar coming out of the British system, so that was good. And as we said here, many people have said our cultures are very similar, so that was good too. So we felt it was a good fit. But we didn't just go in and buy a bank. You know, there was a lot of research being done, so that is what I would recommend for anyone who is going across in the Ghana continent. Please do your research. We spent a couple of years researching the opportunity, going over to Ghana, right, physically, because you can't go to a continent, you can't go and invest in a continent you're unfamiliar with virtually. We went there, we took several trips, senior executives, to look at the opportunity to discuss with the bank, with the regulators, and so on. So a lot of research was done. And then in 2012, we made an initial investment of about 10% with the intention to increase it in short order. And then things got kind of complicated. We ended up in courts. Part of the reason is there were some entities, stakeholders, that didn't want to sell us the bank. They didn't want the Trinidadians coming in there, and we had to deal with that. And that took a couple of years. And then we made a further investment in 2013, which took us up to, I think, about 30 or 40%. And then in 2015, we got a majority stake, and we have a stake of about 60, 66, 67% now. So it was a process, and although the bank is doing well, there were challenges. Because during that time, in fact in 2017, there was a banking crisis, and about 10 banks failed. And if it was not for the Republic Financial Holdings Group, the parent company, ability to put further capital into it, we would have been in trouble too, and management experience and expertise. So we were lucky that we had a big brother or father, right, in Trinidad that had the management experience and had the capital to inject. Otherwise, we too may have found ourselves in a little bit of difficulty. Then, of course, there have been currency devaluations. I would say over the last 5 years, I think the currency has probably devaluated about 30 or 40%. I'm subject to correction if anybody wants to correct me. So there was that to deal with too. So over that last 5-year period, the bank has doubled in size, doubled in terms of assets, and doubled in profitability, but then there was devaluation. So when you convert to US dollars, it wasn't a one-for-one sort of thing. But we have grown, and we have done good. The bank we bought was basically a mortgage bank. It was HFC Bank Ghana, and the HFC was Home Financing Corporation. So it was a mortgage bank with about 40 branches. We still have about 40 branches, and very, very small branches. And we added value. We turned the mortgage bank into a full-fledged commercial bank. So for instance, they didn't do corporate loans or commercial loans, business loans. That is now the largest part of the assets in the bank in Ghana. So that has grown leaps and bounds. In terms of the payment space, because they were a mortgage bank, so I'm not saying this because the bank was a good bank, but their focus was different. So we added value in terms of the payments. We introduced credit cards, debit cards. We have a mobile money wallet as well. So we added value, turned the bank from a mortgage bank to a full-fledged commercial bank. Out of 23 banks in Ghana, we are number 16, so we're still relatively small. But there's opportunities. We have heard here $1 billion in trade is on offer, so there are opportunities there. But you have to research it well. You have to ensure that you are comfortable going in there. It may be best to go in with a partner, depending on what you're doing, so you get the local knowledge that is invaluable for when you go into a territory that is so far-flung and perhaps, although we say similar, still different. So that's another piece of advice there. So the bank has done well, but there are a lot of challenges. There could have been potential pitfalls if we didn't have the backing of a strong group. So that was important as well. So, Robert, I think it's a good opportunity for whoever wants to research it well, ensure that you know what you're getting into, have a fallback position, don't put all your eggs into one basket, have some kind of fallback if things do not work out as planned. You have to think about things like devaluations and currency fluctuations. That can wipe you out in one fell swoop if you're not careful.
All right, let me close now. Let me go back to members of the panel and ask basically to make some wrap-up statements, some closing remarks on any issue that they think that will be required to help improve the whole ecosystem or the value chain with regard to finance and investments flows in the Caribbean region. Let me ask Clevinson to kick us off, and then please, let's go down the line.
For me, the key takeaway from this is that if we want to achieve our objective of facilitating trade and investment, it cannot be business as usual. Absolutely. We have to be able to modify our systems in order to be able to deliver on what is the key objective. So once we define that objective, you know, my dad once said to me, you have to know what you're prepared to lose. And once you know what you're prepared to lose, then everything becomes easier. And therefore, I think we have to be able to define our objective, and if trade and investment is the objective that we have, then we have to look at the systems that we put in place to be able to achieve that.
The statistics that came out this morning from, I think, was ITC says that 0.1% of Africa's exports, 0.1% goes to the Caribbean. And only less than 1% of Caribbean exports to Africa. That in itself, but it said it has a potential of a $1 billion potential. You know, it also says that 70% of African exports to the Caribbean are in their primary form. That's about $700 million. Another 50% of Caribbean exports to Africa is chemicals, about $200 million. What it tells us is that for Africa to trade with the Caribbean, as much as we wish it, we have to start becoming industrialized and expanding our value chains across the regions.
I will piggyback on what Canario was saying in terms of opportunities. We, through our local banks, do see a lot of opportunities that we can present to businesses from the Caribbean. So if you were around, my team is around, Mr. Abdullahi and Diallo and Bangura Mohammed are here. I'm here. So if you all want to know what's going on in our countries, or if there's this specific sector of interest, we're happy to link you with potential players on the ground so you can do business. And again, as part of the ecosystem, obviously to promote Caribbean-Africa trade, you need players. You need, as Kanazo mentioned, everybody has to play his role in the ecosystem. We as an investor in financial services are interested in being in the Caribbean. We will be here. And we will provide that linkage between Africa and the Caribbean to finance people that want to do business in the Caribbean, or Caribbean doing business in Africa, and vice versa. And by being present here on both sides of the aisle, we will also alleviate that issue of corresponding bank and payment.
We came here to open up new corridors. We didn't come for talk shop. We came to create that new order that is the Africans and the Caribbean people coming together to do this. The SME will represent the largest pool. 70% of that. I told you the new market we're creating has a potential of 3 trillion. If the SME will represent that, then I need us to remember that the trade that is going to move will be predominantly $30,000 and $50,000 in value. The large players are only going to be 5 to 10% of that. Those are the ones Afri-Exim Bank will finance. The rest of them are local banks will finance, or they use their own funds to move money across the borders. If that stands to be correct, then the point I'm making is we need to go back to policy, we need to have a shift in policy, we need to go back to regulation, and we need to take the products we have and recalibrate those products to make this possible.
I think for us, there has to be a deliberate attempt. My colleague spoke like a true banker. You know, I was a banker also for very many years. Now I'm investing and I understand the pains of the SMEs. Now I'm financing SMEs and trying to structure them. I understand the pains. But it must be deliberate. This must be deliberate because without that bedrock, you can't do very much. Okay, and that's why I gave the model that we use today to do that. And it's something that we're very willing to discuss, you know, and see whether it's something that we can operate here, where we call the AfriCelerate program to get this whole lending thing done. It's working, it is working, and SMEs are getting the benefits of that, you know.
To facilitate the development of trade and investment between the Caribbean and Africa, one of the things we maybe need to look at is taxation, and having a double taxation agreement so that when you are taxed in Ghana, your profits that are repatriated don't have to be taxed back in the Caribbean, and vice versa. So that's one of the areas for the policymakers to think about, and we could put that forward.
We clearly have political will. We clearly have a market. We clearly have financial products, as for Afro-Exim Bank, all right? What is clearly coming out, again, is the whole ecosystem and the need for local financing for our SMEs to develop the institutions to be able to push the products. But it has happened before. Investments have been made by Republic Bank. They give us an idea of what are some of the things that we need to look at. This is possible. This is the dawn of a new day. Let's just not talk about the negatives. Let's talk about looking at the market, staying forward, and putting the different things in place. These things are not impossible. It just requires the time, the energy, and the will to make it happen. And in the words of Nike, let's just do it. Thank you very much.